Mm. That up. Yeah, I was. I was not feeling good last week. I feel much better now. So that's a good thing. Hold on, I'm gonna give it a couple minutes for people to get in here. What am I missing? Is there an inside joke that I'm missing? Oh, okay, I get it. I get it. I get it. Can you not hear me? Okay. Why? I don't know. Somebody was saying I was muted. Okay, that was a lot of people pretty fast. I showed Leo on the last stream. He's somewhere around here. Okay. All right, so I'll get the screen share up in a second here. Let me just pull up over here. Um, we're gonna do just what we normally do to kick these streams off, which is just go through most stocks in the portfolio. Um, let me see here. We generally don't go over the legacy positions, so we probably won't do that. But I mean, that still leaves what, 26 charts to go through. So we'll see. I mean, we probably will just go through everything because then otherwise people just tag me in the ones that we didn't go through. So we'll go through all 26 relatively quickly. I'm not going to spend 30 minutes on each name. Um, if there's specific questions, as usual, go to the questions channel. Okay, I need to mute this. If there's questions as usual, go to the questions channel. Um, during the stream and tag me. And if it's topical to what I'm talking about at the time, I'll answer it. But we're not doing a big Q&A segment this time like we normally do because we're going to do that lightning round thing. So don't just like load it up with 100 questions because that's usually what happens when I say to do that. You guys just put like, I don't know, 200 questions in there. So don't do that because then this stream will end up being a Q&A session if we do that. I'm not saying I don't want to answer your questions. Just tag me in a non-stream time and I'll answer them. So that way we're not spending an hour doing questions this time. So we'll do um, portfolio chart review. I'll try to get through it in a relatively timely fashion. And then we will do this lightning round thing that I've been talking to you guys about because I know that the demand for that seemed pretty strong. So um, I'll probably spend 20 seconds on each name for that lightning round thing just to give you guys an idea of like how to do very, very superficial basic screening. And then from there, we will see if we have time left and maybe do some additional questions after that. Okay. Okay, let me get a screen share up. It's gonna let me do it. Hold on. What the? Okay, you can see it now, right? You guys can see the chart screen. Okay, cool. Can you still see me in the top right corner? All right, bet. Okay. So we will run through these. Again, the purpose of me running through charts on these workshops is I'm literally doing what I do. Okay. So um, there's going to be some educational commentary, sort of just because I know you guys are watching me go through the charts. But if you guys were not watching me go through the charts, I do this anyway once a week. Okay. I go through every chart of my portfolio once a week. And whether you're a technical trader or not, or an investor, frankly, whatever style you are, you should do this. And you should do it pretty regularly. It could be once a week, it could be once a month, it could be, whatever your kind of tendency to be active is. If you're a person that's active every week, you should be looking at your charts every week. If you're a person that's active once a month, maybe you can look at them once a month, but you should be doing this regularly. And so that's kind of where it encourages. And then obviously, you get to hear commentary from me during these streams about my conviction level at times, what I'm looking forward to, where the stock could fall to or could run to. You'll hear stuff like that along the way. Obviously, for those that tune into these streams regularly, and as always, there's a stream library, a couple of channels underneath my portfolio channel where you can watch the previous streams that we've done. There's some that are educational, there's some that are just chart reviews like this, but I think it's probably worth watching all of them if you want to get a good idea of um, how I think about stocks. All right, we'll go through our robotics and edge AI basket first. Obviously, OSS had a very big week last week. Biggest earnings reaction ever for the stock, but also the highest volume candle ever for the stock. And what has this been public? 10 years? Yeah, roughly. Um, so if we zoom out a little bit less than this, actually, we zoom out back to here, we got long in this range, right? My cost basis on this is 471. And I think after my alert, it sat in the 4 to 5 range for some time. Um, and obviously, a lot of people were in this one. And so we saw a pretty big reaction to this on earnings last week, 60% to the upside here. and not the highest weekly volume ever, but the highest daily volume ever, I think by quite a margin. And you can see here how much bigger it was, even from our alert, right? Where, a lot of interest in our server, a lot of wealthy people in our server, stocks move and see high volume days when they get mentioned in our server. But even with that, it just got dwarfed in volume by this earnings report because of how good it was and how good the call was and the opportunity that was identified. Keep in mind, this company guided for 25 to 30% growth um, in their guidance of the last quarter and posted a 55% growth quarter that was really stellar on all metrics. The margins I thought were very impressive for a company of this size to be posting margins like that, selling essentially NVIDIA GPUs in a sleeve, if you want to be really, really rudimentary about it. That's pretty impressive. And then I think it means they're offering something in the edge compute space, in the ruggedized compute space, especially that is a unique offering. And I think they're filling that niche. And that's why you got market recognition for it on this earnings. And now the stock is completely re-rated, right? When the stock was $4, 450, I said I could see it easily going to $20 plus. I think we're well on our way there now. I mean, the stock's $16 now. Has more than 3x from where we bought it. So great ride for those that are in OSS that enjoyed it last week. Obviously, this stock did a hell of a job shaking people out along the way. It really did a hell of a job. I mean, you look at this space down here, the action over here, these aggressive breakdowns below the moving averages where the stock will underperform for weeks at a time. This thing has done a great job, like most small caps do, by the way, of introducing volatility, shaking out the crowd. Leo, don't do that. Of introducing volatility, shaking out the crowd, and doing it in a way that's not only dynamic but tests people's conviction. And I think the people that really did stick with the stock for months are the ones that did understand the story, that did understand that original thesis I shared. And remember always you can, if you don't know or if you're new to the server, you don't remember, you haven't heard me talk about these stocks for months, you can go to the thesis library and read about them as well. But this stock I like when stocks that I'm in shake out the weak hands because it's what allows for moves like this to happen. When people want to get back in and they realize that they fucked up or they realize they missed the story and it creates a crowding effect. And now we had that on this earnings and a massive gap up to the upside. So big move, good validation of our thesis. Obviously, I think we were earlier than anyone on this and held all the way through. And for those of you that are new, you can search OSS in my journal and see how long we've been talking about this one. Now, what about the action lately? So we get this massive gap up, right? You'd expect somewhat of a retrace after the 60% move on the highest ever volume. Nope, no retrace. You see this high and tight consolidation starting to form now. The moving averages are catching up quickly. I mean, the 9 EMA on this thing now is now at $13, which is higher than its previous all-time high. So the moving averages are catching up quickly. Obviously, a big move is going to do that. And you can see how tightly stacked, right? We talk about this all the time, how tightly stacked these moving averages were here before this move happened, right? They were just all stacked on front of each other. We talk about these moving average stacking, this sort of launch pad effect that can happen where you have all of the moving averages lined up in succession, price sitting right on top of it, going into an earnings report, and then boom, you get the 60% move. So high and tight consolidation happening after that earnings is even more impressive than the earnings, or not even more impressive, but equally as impressive as the earnings move itself. So not really actionable stock here. If you're not in it, sorry, kind of sucks, but not an actionable stock here, not until the moving averages catch up. Now, could this just gap and go again before the 9 EMA catches up? Yeah, obviously. But remember, trading's about discipline, right? Trading's about a replicatable process. And whether you're a trader or an investor or whatever, entries matter, right? And when we got long on this thing, when it was $4.70, right? The risk reward and the amount of time this stock had spent basically since 2023, building this base, that was attractive to us. And now it's obviously not basing anymore. Now it's a momentum stock. But if you look at it when it was down in this range, this was a great time to enter the stock. This was even a decent time to enter stock, although not nearly long enough, not nearly as long of a base building, but this was also a nice time to enter the stock. Even these moments, as brutal and messy as this price action was, if you had conviction, even this was a great time to enter stock. Keep in mind, the stock came back and tested $7, and now we're at 15. So, hell of a name, obviously not actionable here, high and tight. Wait for the moving averages to catch up if you are having terrible FOMO about this and want to get long. But it is now more than a 3x from our initial entry on OSS, so that's awesome to see. Okay, VLN. So VLN's reporting earnings, not tomorrow, that's VPG. VLN's on Wednesday. Well, I got long here, 150. Some of you bought all the way up here. Some of you bought on the retrace down to the 180s here. Some of you bought the highs here. But obviously, most of you, I think, imagine, got into this candle here. And since then, we've been seeing this again, high and tight consolidation, but not even really consolidation, just price slipping away to the upside continually and then two monster candles in the last two sessions to bring this into new highs. Now, very different from this last gap up, right? In beginning of 26, I think this is when Serenity alerted it. So this is my alert and this is Serenity's alert. But my alert has performed a lot better since. Not saying it's a reflection of either of us, but um, this stock just cascaded and fell, whatever, from 270 to 110 following this surge and started to recover. And then once I saw it here, recovered all the moving averages, came and sort of softly back tested this 100-day. That's where I wanted to enter. So we entered here and then boom. Now, price sitting at 285 headed into earnings. You have to understand if you have read the VLN thesis that this is not a low risk idea, right? This is a company. I mean, look at the chart, right? This company has not been in favor for many years because they're burning cash. Their scale is too big for the company to absorb, and so they're burning cash. Now, are they in any sort of financial solvency risk? No, not at all, because they have no debt. They have a ton of cash, right? When I bought the stock, it's trading at 2.5 times cash. It's still trading very, very reasonably in my view compared to its cash pile, compared to its EV over sales multiple versus basically any of its semiconductor peers. Now, Indie, I didn't really look too much into their report, but they are a peer as well in the auto semiconductor space. I don't think they had a great report. I didn't see any crazy headlines about it, but that stock did well today, I think, and yesterday has been recovering. Actually, let's go peep at that. I don't own Indie, by the way, just to be clear before we flip to the Indie chart, but it is a peer of VLN's. Um, it's a nice looking chart. So yeah, not a great earnings reaction, but then has basically held price the entire time. So that setup looks really clean there on Indy and VLN, which is the one we are in here, is making a pretty significant move here on the weekly, as we can see. So this is the first 200 week moving average break for VLN ever, right? The 200 week popped up, late 24 here, has come down to price. Price now skipping above it. If you can really get a breakout here above this 3.5 area, which is really the highs of this medium term base, then that's where the sort of potential that I mentioned in mind of this thing to go to six, that's where that comes in, right? You can see here 599, the highs of this former range here. So um, that's what I'm looking for. Obviously, I mention this all the time. I don't buy stocks unless I think they can double. Every stock I've ever bought obviously did not double, just to be clear. I'm not saying they all do, but I buy stocks with the intention that they can double. And a lot of them do, not all of them do, but I think this one has the potential. So that earnings report is coming up. On a bad earnings report, what is the scenario, right? Well, the scenario is that you see an aggressive retrace into the moving averages. Now, that would mean from here, 285, you can see the stock fall to 240. You have to be able to endure that drop, right? If you are somebody that's long on this name going to the earnings. If that's something you could not endure, in other words, you have too much capital in the trade to endure that, then you just don't take it into earnings. Pretty straightforward. Could it fall further? Yeah, absolutely. It could fall to the 21 EMA too, depending on how bad or good the report is. So be mindful of the potential risks, right? This thing could retrace. It could even come back and retest the 200-day breakout. Who knows? We don't know. I don't know. It could go down 30%, right? You have to be ready for that on a small cap. You should not own small caps into earnings if you are not ready for a massive move in either direction. And that also goes for OSS, which we just went over, which went up 60%, right? So it can go either way. But um, the goal of these positions is not to play the earnings. That needs to be made abundantly clear. I think I've said that many times in my journal, but my intention is not to get rich from earnings reactions. That's not how I make my money. I make my money by finding stocks that are ripe for multiple expansion and targeting them aggressively, leveraging into them, and letting that happen over the course of several quarters. I'm not playing one quarterly report, hoping that I hit the big lotto and walk away. That's what a lot of you do. Most traders that do that suck and can never build consistency. So if that sounds like you, somebody that gambles on every earnings you can, you're trying to get rich quick, and that's a good way to not get rich. So VLN earnings coming up, like I said, not really actionable going into them. You're long, you want to stay long, cool. But with this much distance from the moving averages, I don't really view this as actionable. Again, big gap up, high and tight consolidation. Again, I wouldn't even call this consolidation, just price leaking away. Um, you have to be okay with that not being actionable in the moment. Synaptics. So Synaptics, another one that gave us a headache for about a month and a half, shook a lot of people out, and then made its true move. I've been acting really beautifully since April, right? Since we started seeing this basing action in April, again, all the moving averages tight, just like we saw with OSS before the big move. And then we start seeing moving average separation, stocks riding the 90 EMA to the upside. You get this massive gap up on earnings, and now we're holding the close here on today's candle and closing higher, which was great to see for Synaptics. So Synaptics now starting to be discovered. Quite a bit of range here still to access, I think. We're breaking out of this, basically 2 year or year and a half sort of base that we've built. Coming up, breaking over this 121 spot. You have access to the 150s, I think, in short order. And if you can eat through that range, basically between 142 to 154, I think you're headed back to the 200s on this thing, and plenty of valuation room for this in my mind, considering how quickly they're growing, considering how cheap they are versus peers. Plenty of valuation room on this name, I think. Um, Start of the year, a lot of these heavily China and Taiwan exposed semiconductor names are trading at deep discounts to the rest of the space. That has changed. You know, we've seen names like MaxLinear, MXL gap up like 70% on earnings and then keep going. So many of these China and Taiwan facing semiconductors have seen a significant re-rating, right? And so now you kind of think that that overhang has been lifted for Synaptics, and at least I do. I thought the report was excellent. I think they made a very, very good case for being a robotics adjacent play, for being a leader in edge AI, for being a leader in on-device inference. I think they made the case pretty well in the last report. Now, what do we want to keep seeing? We want to keep seeing this sort of explosive growth in core IoT. There was a slight deceleration quarter over quarter in terms of the year over year figure, but you were dealing with a much easier comp last quarter, right? When you posted that 55% year over year growth in IoT. So this quarter, I think you had 36 or 37, I don't remember the exact number in IoT. We want to see that number stay above 30. They kind of have some lumpy revenue in certain quarters, and so you can't just look at the year over year comps and gauge your view on the growth that way. And the market understood that fully on this report, which is why the stock was up 20%. Now, this is a beautiful breakout of the 200 week. And like I said, if we can eat through this 140s range, probably sees 200s from there. So staying long Synaptics and enjoying the ride. And obviously, this was a hard one to hold as it fell from the 80s down into the 70s, really all the way down to 64. I know a lot of people gotten shaken out. Trust me, I almost got shaken out myself. But as you guys know, I kept reiterating in the portfolio updates for weeks and weeks and weeks um, because I had conviction. And the conviction has once again paid off on this last report. So those are three names: OSS, VLN, Synaptics, and Robotics Basket. Let's go to VPG, which reports tomorrow morning. So VPG has been climbing slowly and steadily for us. Now it's trading 66. We got in 53 a couple of weeks ago. Uh, and it's just been cruising to the upside, climbing this 9 EMA, really not giving anyone much of a headache. No real signs of alarm here, no signs of panic. Just been climbing to the upside. They report in the morning. Again, the thing we're looking for here just like I said in the VLN thesis, is just continued traction on the humanoid side. Um, I really scoured. I had about 7, 8 robotics names in the sensor area and in the motion control area as well that I was looking for real humanoid traction on. I'm talking about like material revenue, and the only name I could find was this, and that's because they had roughly 4% of their sensor segment revenue from humanoids. Now, it's funny because when I say that, I know that there's fools in the background that are like, well, 4% is nothing. No, no, no. 4% is a lot for an industry that doesn't exist yet, right? Like humanoid robots do not exist yet as an industry. That needs to be like very, very well understood, especially if you're trying to invest in them. What you're looking for is you're looking for tea leaves in the supply chain. You're looking for companies that are being tapped by potential purveyors and producers of humanoid robots to do material work on the prototype side and on the tooling side. That's what you're looking for. And anytime you want to be new, if you want to be an early entrant into a new industry, especially a hardware industry, you need to look for those tea leaves. You need to ask yourself, like, okay, I'm not going to find a company today that's doing 50% of revenue from humanoid robots because there are no humanoid robots. I mean, not literally speaking, there are humanoid robots, but not at scale. And so you're not going to find a company that has a pure play exposure to humanoid robots, right? If you did, it would be a pre-revenue company or it'd be somebody like Figure who is a private company. You're not going to find a public market exposure to humanoid robots that's pure play. It's impossible because the industry doesn't exist. So we look for tea leaves, and these guys have real tea leaves, right? They have real multi-million dollar prototype and tooling orders, right? For an $800 million company, their biggest segment, their sensor segment, that's 4% of their sensor segment revenue. That's material. In my view, it is. Okay. I can have a debate at end, I'm sure, with somebody who probably disagrees with that. But in my view, that's clearly material for a brand new industry. So that was the thinking behind this one. Now, here's the thing, there's a lot of earnings risk as a consequence of that, right? Because our thesis is not going to move the needle on earnings, right? So I'll reiterate that. There is more earnings risk with this name because our thesis is not going to move the needle on earnings. So what we need a company like this to do on earnings tomorrow is to say, okay, the rest of the business is going great anyway, and then pump the humanoid angle. That's what we want them to do, right? So in the Q&A section or when the CEO is speaking, we want them to stress the humanoid angle while also having a remainder of the business, right? The core of the business doing well either way. So that's what we're hoping for tomorrow. And I did a lot of work on the rest of their business. I think the rest of their business is solid, right? It's not an explosive growth business, but it's solid. If they can put together a fine quarter on the overall business and then emphasize the humanoid angle, even maybe upsell the humanoid angle by saying, look, we got more follow-on orders than we mentioned last time. That I think sends the stock higher. Alternatively, they emphasize the humanoid angle, but don't really produce strong inter-quarter results on the overall business. I think stock trades down on that. So I'm prepared for both results. Obviously, again, we have a nice cushion on this going into earnings. So that gives us a little bit more flexibility to kind of see what happens and maybe even stomach a little bit of a negative reaction, right? So that's the thinking here with VPG. They report tomorrow in the pre-market. Okay, CTS, who's already reported, and I think had a pretty excellent quarter. The stock's again been not too noisy and not too hard to hold. Had a little bit of a consolidating period here in the 50s, and now we're breaking into the 60s on this thing. Completing a cup break here. You can see this sort of, well, I won't really call it a handle, but this attempted cup here, and now pushing into the highs and pushing over this 59.61 from the previous highs here. So looks nice, right? This you kind of see the cup a lot more clearly here. Um, Going back to 25, going back to 20, sorry, late 24, down here at 59. So we wanted to break over the $60 spot. We're doing that now on CTS. And the traction we saw on their last earnings really validates the thinking here, which was that we think we want their transportation revenue to continue to fall, and we want their robotics and automation revenue to go up. And that's exactly what happened this quarter. That was a thesis for us going back into the previous quarters. So they're doing what we need them to do, and I think the valuation is still very, very reasonable for this name, especially considering how much a lot of the other electrical component stocks have run. So yeah, I think the potential is still here for them to continue to execute on that story, drop transportation segment revenue, and grow in the robotics and automation segment revenues. And if we continue to see that, I'll probably continue to hold it um, on this name. So that's CTS. So that completes our robotics basket, except for our newest position, which is BlackBerry. So BlackBerry is opened last week, and very interesting story here, I think, which is that the QNX platform, I think, is just being completely misrepresented and misvalued. Very similarly to, it's funny because these are both the newest adds to the robotics basket, VLN and CTS, or sorry, VLN and BlackBerry. The thinking is really similar here. Obviously, they're nothing to do with each other in terms of their businesses, but the one overlap they do have is that they're both auto exposed, right? The QNX platform is an automobile platform for modern vehicles that's in 175 million vehicles, and VLN does auto chips. Now, why am I bringing auto into the robotics basket? The thinking is pretty simple. First of all, ADAS systems, so assisted driver assistance systems. Essentially, what's happening is that you're taking camera feed data and translating it, transmitting it to a robot, a car, which is a robot, a modern car is a robot, right? And so there are motors, actuators, sensors. See the linkage? And so platforms that are enabling smart vehicles, in my view, are the most ready platforms to transition to robotics. And so that's really my thinking, both with VLN and BlackBerry, as additions to this basket, is sort of the neglected automobile technologies, which are neglected by the market over the last few years for good reason. There's been a slowdown in smart autos. These names that are neglected by them are, I think, good candidates for a re-rating. And I think the QNX platform is far more valuable than the market's giving it credit for. And it's funny, there was a Wall Street Journal article recently on this topic as well. I believe it came out on May 1st. And they were retweeting it this weekend, I think, because a lot of people were tagging me in it. But Wall Street Journal reposted that article this weekend, so you can go read that Wall Street Journal article if you want as well. Um, or you can just read the DD I put out on it. But for the most part, the thinking here is that if QNX gets re-rated as a robotics platform, this stock has significant upside. And so this isn't really a valuation case as much as it is a re-rating of a technology set that's possessed by this company. And I think that if that materializes, I think you have a $10+ stock on your hands here. So you can see here really, really nice volume profile. During the last several weeks. You can see these massive towers of buyers and really no selling at all. And if you zoom out, you can see the kind of base we're targeting here, which just goes back to 2023 here. And I think if we can hold and defend the break over the $6 range, really over 575, then I think you have a potential major move on your hands. You can see it a little bit better and a little bit cleaner on the weekly and monthly here. And you can see the monthly now poking its head above the 100-month moving average as well, which has been flat for so long, right? And you zoom out a little bit more here too. You can kind of see the potential we're talking about as we break out of this range to get to 9, 10, 11, 12, maybe even higher in terms of the potential for the stock. So uh, I like what I'm seeing both technically and in terms of the value of the QNX platform. And so as a consequence of that, I think, this is an interesting one. In fact, the more I look at this one and talk about this one, I wish I had taken more size. But I'm obviously getting very long in the tooth on my position count, so I'm having to be more and more conservative with size as we go through these names. So I think this one's going to be a banger as I do with all my stocks. Um, so that's BlackBerry. Okay, let's look at Power Grid. Okay. A lot of these I don't think are going to be actionable because they've been high flyers, not where they are right now. If you're raising your hand in Zoom, don't do that. Just tag me in the questions channel. ENS, I mean, the stock has been so stress-free for us this whole time. It's now more than doubled, so another multi-bagger for us from last year. We have Amcor. I mean, basically, even the ones that I sold last year, DigitalOcean, Photronics, they've all kept going. Um, so I don't even know how many multi-baggers from last year. We probably have like 15 multi-baggers from last year, probably more than that. But this is another one for us now too. ENS is more than doubled from our entry now. Trading 236, just so many unique exposures here as a real US based battery manufacturer with exposures to the drone markets, the military angle, um, the robotics angle. These guys just have so many cross applications, battery energy storage. They're just really all over the place. And so the level of thematic overlap for this name has been so strong. It's made this name a beast. I mean, the whole way up here from our entry in the 112s last year was a clean ride of the 21 EMA, basically stress free. Then on this earnings report at the start of the year in February, we get a bad reaction. Stock acts like shit for a couple of weeks and then turns around and is now trading at all time highs. So stress free for us here. Continues to ride the 9 EMA to the upside. I think the valuation is still quite reasonable. So I continue to hold it. Right, it's sitting now as our fourth biggest position, I believe, right behind OSS. OSS, I mean. OSS really kind of leapfrogged ENS out of nowhere. When the stock moves 65% in a week, I guess that's going to happen. So OSS did overtake ENS last week, but ENS still very large position in the portfolio, over 10%, um, and continues to climb and continues to act really wonderfully for us. All right, PLPC is another one that just goes up and up and up and up and up and up and just never stops. Um, I mean, we got long right at the perfect time. Down here, and it has just been humming to the upside for us ever since. Another one where if you're in it, great. If you're not, I mean, are these stocks a bit extended? Sure, but they're just momentum names at this point. These power grid names that are just getting bid, it seems like every day, and every dip gets bought. I mean, PLPC had some bad action here, got bought up literally on one candle. So the stock's very tightly held. People don't like to sell it. I am getting a little bit less hype about the story the more the stock climbs. And obviously now it's been put out in the public. Everyone knows about this name now, but it was a lot more undercover when we bought it, a lot cheaper when we bought it. So a little bit disillusioned by it at this point because I don't think they solved a lot of their problems in the last quarter um, with regard to the tariffs and with regard to their return to growth. So um, I still like it, still own it, but I was looking for 500 originally on this name when we bought it. We're now about to hit 400. Um, so we'll see. We'll see. But for now, it remains a core position, obviously, smallest weighted core position, but going to remain long on this one. Okay, AMSC. This is a recent one. Obviously, a recenter add to this basket. It's been beautiful. Cruising to the upside. So we got into 41 around here, and the stock has broken through the 200-day moving average and is now trading 58. I think at the highs of today it was trading 60. So this thing has moved very, very quickly. Um, as far as grid modernization goes, grid stabilization goes, these guys have a very, very powerful niche there. And as you can see, we've basically filled into the gap now and are going to approach this 60s range, which was pretty brutal trading last time we were there, very volatile. We're headed for that range. I think this cup will complete and break out, all things being equal. Trailing P is still pretty reasonable on this name and their earnings are coming up on the 3rd of June. It's a recent position for us as well. And again, as always, for people that are new, all of the theses are available in the workshop library. Okay, been a while since I bought a new IPO, but obviously this was one of them. These guys have earnings coming up this week as well, I believe. Did I even put that in the journal? Am I right, guys? Anyone know? I think that these guys are this week too. Yeah, Thursday. Thursday pre-market. Yep. Okay, so we don't have as much price history to rely on here, right? We don't have like months and months or years and years of price history. So that makes it a little bit more challenging right off rip. But the other thing is that we don't have any publicly reported financial information either. So both sides of this are dark. It's part of why I generally don't ape into or share ideas on new IPOs. So this is another one of those cases where I was a bit hesitant to buy it for that reason, but I just felt like it was in a really, really compelling um, niche in the market. And so maybe I'll be wrong. Like I said, I'm always open to that possibility. Um, it is not cheap. That's an important thing to keep in mind. It's not a cheap stock. Um, but I think it is an interesting story and it's sized appropriately, right? It's sitting at about 1.6, 1.7% waiting for us right now. It's sized appropriately where if it wants to tank on me on earnings, so be it. I can survive that hit. But I do really like the story. Again, go read my original thesis if you are interested in finding why I like the story, but um, hopefully they have a good earnings and we can see this thing break out of this range and bring some more interest into the stock, bring some wider interest into the stock, maybe some wider institutional interest as well. So that's Forgent Power Solutions. So that covers our four power grid names. Let's go to should really rename that basket just Power because these aren't all grid names. So yeah, I'm going to actually do that probably next week. All right, Amcor, sweet summer child Amcor, which has now more than tripled for us. We got long here, obviously back in September. Stock's now trading at 76. There continues to be there continues to be a extraordinary amount of interest around advanced packaging. Extraordinary. And this is part of the reason why I haven't sold Amcor because I think the tailwinds are too strong. I think the winter agnostic tailwinds are too strong for them to capitalize on. I mean, everyone is talking about advanced packaging being the real true bottleneck, not only today in terms of capacity, but in terms of chips getting more and more advanced being able to address advanced packing from a power efficiency standpoint and from a chip complexity standpoint. So for more complex chips and chipsets and for more power efficient chipsets, we need advanced packaging solutions. And Amkor is obviously the US leader in that as far as OSATs are concerned. And I just think they have too much thematic relevance. And we have such a deep cost based advantage now. It's easy to ride this name. And is it egregiously expensive? No. This is a name that just returned to growth, right? When we bought Amcor back in September, this name was not growing at all. I don't know if people remember the criticisms I was getting on my original Amcor post. People were like, why are you buying the stock? It's not growing, right? And my thesis was it will start growing. And just last quarter, what did they do? They posted a 30% growth year over year. So now our thesis is getting proven correct. They are now growing. And so from a perspective of a stock that just returned to growth, I don't think it's egregiously expensive either. And so we're in a situation where, yeah, are we up a lot? Yeah. But am I selling? No, because I think this is about as good of an exposure as you can get to the advanced packaging trend, especially if you want to get that exposure domestically. If you want to get it domestically, it's like the only play to own. And so I think it continues to be a really, really unique asset in the market. So I'm not selling. And that's why it's still the second biggest position. I feel the same way about Viavi, right? Which is our biggest position. I feel the same way, where I just don't think it's unreasonably expensive still. And they're a toll booth on the whole photonics industry. On really on testing in general. They're one of the biggest testing players in the world now, especially since they got Spirent. And so you have network testing and you have the photonics testing side. It is really, really, a unique exposure, right? And another US based company. So Amcor and Viavi are unlikely to go anywhere. They're unlikely to be trimmed. They're unlikely to be downsized. They're at this point more like investments than they are like trades. That's why they are such a big portion of the portfolio. I mean, just Amcor and Viavi themselves, forget about all the other stocks, just those two stocks are what? Let me see. Like 30% of the portfolio, just two stocks, right? And they both, and I mean, I'm not mad about it because if you look at them year to date, I mean, Amcor has been great year to date, and obviously so has Viavi. Viavi's been even better, right? It's just gone a straight line up. Viavi opened the year at, 18 bucks. I bet you some people are so bitter for not buying this thing and based out at 18 bucks, but that's a $55 stock. So yeah, they've just executed flawlessly. They've executed flawlessly, and I don't feel like selling either of them. And the cost basis advantage is part of that reason too, but really it's because of the execution and the fact that neither stock, I think, in my view, is egregiously expensive even after these runs. And so Amcor and Viavi are going to remain in circulation. All right, Nebius, their earnings are coming up this week as well. This stock has been an absolute monster ever since it pulled back in the 200-day moving average, 90 bucks here, and then just pulled a reversal off. Obviously, now we're trading at all-time highs. This name is our deepest cost basis advantage of any position we've opened recently. For those of you that know, we got in back here in May quite literally near the lows for this stock. I mean, we got in at 24 bucks, $5 or $6 off the lows here in May, and look what it's done for us since, right? Just been an absolute monster. Now, this area, several months of boredom here are what scared a lot of people out and said, this stock sucks. Everything else is ripping. I don't want to be in it. And once you shook out all the weak hands over the course of several months, then you were able to break out and um, make this move. Now, this goes to show you that this goes to show you that stocks need to do this. Even the best stocks in the world need to do this. They need to consolidate. They need to pull back. They need to have a month or two of underperforming. You will never have a 10 bagger. Never. If you can't go through a period like this. Period. You just will never have it. I've seen charts on I don't know how many 10 baggers over my life. None of them go from $1 to $10 or $10 to $100 in a straight line. That never happens, ever, ever, ever. There's 4 or 5 months, sometimes 2 or 3 years where they underperform before that happens. So you have to decide between opportunity cost, conviction, and what sort of time horizon you operate on as a trader. All of those are factors. But for me, as somebody that was super convicted in this name and felt like they're the best AI team on the planet, the action down here didn't concern me at all. I was actually hoping the stock would fall further so I could add more. I didn't want to add more in the 70s with the cost base in 23. I was hoping the stock would fall back in the 50s or 60s to be able to get the opportunity to add more. It obviously never did. And here we are now trading 186. So this faked out a lot of technicians. This faked out a lot of opportunity cost focused traders and pull off an immediate reversal is now trading near the highs. They have earnings this week as well on the 13th. So be mindful of that. Structure looks really, really nice though. Looks clean. That doesn't mean anything about any kind of prediction of what the earnings reaction is going to be, but structure looks nice and clean going into the report. I expect them to have some pretty good things to say on the report. Remember, this is not a stock where you look at the revenue and try to value it that way. This is not how that stock is valued. This is a stock that is better valued off of backlog and some of the parts analysis of their subsidiaries. That's what you should be looking at when you're looking at this stock. You should be looking at the valuation of ClickHouse, Toloka, AV Ride, attempting to model those to a degree, adding those up, and then looking at the backlog of contracts they have with Microsoft and Meta to the tune of 30 plus billion dollars. Then asking yourself, is the stock worth $40 billion, dollars, which I think it is. I think it's worth more than that, to be honest. So yeah, I think best AI team in the business, best neo cloud play in the business, potentially one of the best full stack AI companies on earth. I'm not selling it. And it's a seven bagger for us now. Well, almost an eight bagger now, right? Yeah, almost an eight bagger now for us. So, been a hell of a stock and no plans to sell for me. This one will be a 10 bagger in due time, I think, from that $23 entry. So, Nebius remaining long. Now, here's another new position, GDYN, which we opened last week, which does enterprise AI integration for enterprises, which I think is such an underappreciated category of services. OpenAI had an announcement today, which I loved, which is that they're getting into the business of what GDYN is doing. Now, somebody messaged me and he said, "Oh, doesn't this suck that OpenAI is competing with them?" No. When you're talking about a $500 million company that's doing this at a very, very reasonable valuation, if you go back and read my GDYN thesis, I think the valuation is extraordinarily reasonable in consideration of their growth. When you have a company like doing this and a big company like OpenAI comes and competes, you don't, that's not perceived as competition. That's perceived as validation. That's perceived as validation that that business is a valuable business to be in. So, that made me even more hype about this one. Obviously, this is probably one of the riskier plays that we have because it is not a great chart, but I am betting on this thing to move higher and break out and continue. So uh, I really like the GDYN thesis that I shared. I think it's dynamic. I think it's an overlooked area of the market. And I think even if you think it's not a sustainable business in the very long run, I think in the very short run, it will be a highly, highly sought after business. This idea of integrating full AI stacks into enterprises who are unable to go and do it on their own, or who are maybe too dinosaur to go and do it on their own. So I think targeting the dinosaur enterprises here and saying, look, let us help you integrate LLMs. Let us help you integrate automation. Let us help you integrate these embedded AI platforms to increase your efficiency. I think that's a really exciting initiative. So that's what these guys are in. All right, Everpure. What a beautiful move on this one today for us, right? Big gap up for this on one-on-one else. Remember, we bought Everpure with the 75 calls here. We upsized here, right? So no, we bought here and upsized here, 27th and 30th, right? Now, why would I upsize that position? Because I felt like it was going to break out over the 200 day. What did we get 5 days later? We got exactly that. So that's where the upsize came from. Hopefully, for those of you that didn't get in on my initial alert, this one didn't move much on my alert, by the way. $30 million company. For those of you that didn't get in on the initial alert, hopefully you got in on the upsize. That, I mean, I hope so, at least. That's why I reiterated it. So hopefully you guys got in on that. That one had a nice move today. I'm coming into the gap, and you're going to see here in the 80s and 90s that this thing has plenty of room higher if it can break past $100, which I think it can. And it's sort of doing a similar thing to what CTS was doing on the way over here with this longer term cup that it's forming and giving potential for a break higher. So yeah, VPG, or sorry, not VPG, P, nice day today, nice validation day. Data storage is getting a lot of attention now, and obviously this is our data storage play, and their earnings are coming up at the end of the month on the 27th. So that'll be the next big catalyst to look forward to on this name. All right, BDC. I moved this under the data center basket because it was better fit there. I was talking to somebody about it. I don't know why I even had this on the power grid basket originally. Shouldn't have been there. It's not really a power grid play. Um, Grid modernization maybe, but much better listed under network, under AI and data center. So bad reaction to the Ruckus acquisition. I think the Ruckus acquisition makes them full stack to add that component of the network in. Um, and so for me, I liked the Ruckus acquisition. Acquisitions are generally not perceived well by the market, though, and you're seeing that reaction here. Now the stock's consolidating underneath its moving averages. Not ideal. Not ideal from a technical standpoint, especially considering the weekly structure is broken down. So I wanted to upsize this one. I was waiting for some stabilization in structure. We have not gotten that yet. So if we can see some stabilization in structure, then I'll look to upsize this one. If not, we may see a little bit more downside before it's willing to settle out. Because right now you're seeing again moving averages stacked on top of price while it consolidates here near the lows. So Not a great reaction to that earnings report. Even though I liked it and I liked the acquisition, the market obviously does not like the idea of a company like this with a very clean balance sheet taking on debt. And so that's what the market's reacting to here. And yeah, you could see the potential downside, maybe even to this 200-week moving average on BDC. So we will wait for price to stabilize here before thinking about adding to this name. Went over the Edge AI basket. Let's look at telecom and voice AI. RDCM. All right, so high and tight. Really, really clean high and tight formation on this, actually, by the way. Just very, very beautifully structured. Big gap up on our alert. Consolidation here. 90 EMA caught up to price. Price is now catching that 90 EMA and staying floating. Um, that's what you want to see. You want to see this ability for price to stay sticky near the highs, and that's exactly what it's done here and defended the close of this candle at the lows of all these wicks. That's beautiful to see. And if you zoom out, this thing has range into the 20s, right? So if we can get over this hump in the 17s, we have range to the 20s, and from there, who knows? Who knows how much the story could develop from there. But if you can just continue to zoom out on this thing, you can see that there is a lot of potential we're working about, right? We're just talking about graduating to this upper range, but if you can break out past that, I mean, then you have a multi-decade base, really, right? Over that $20 spot. So that's an interesting look to me. And if we flip into this monthly, it looks real nice. Looks real clean on the monthly. You can even go to the quarterly too to get more perspective since we're so far out. Look at this quarterly chart, and you can see the perspective here, right? Um, and the potential for this price wise. So another thesis that I really like, I really like all the theses that put out for you guys lately. I mean, obviously, if I write them, I'll tend to like them. But recently, I think there's been some really, really interesting ones. And so you can see here on the quarterly too, moving averages stacked. On the monthly, you can see nice moving average, clustering weekly as well. So this thing potentially gearing up for a very explosive move. Obviously, activists are at play here with this name. Not us, but other institutional activists are at play here. And so they may try to force a sale. They may try to force a rearranging of the board, et cetera, et cetera. That meeting's coming up on the 20th, I believe, the day after their earnings report, if I'm not mistaken. That special shareholder meeting might be the same day, but might be the next day. I'll have to go and verify that. But from what I remember, it's on the 20th, and I think their earnings report's on the 19th for Radcom, which is our biggest position in that basket. Somebody asked me this earlier, by the way. I mean, I don't know. I guess some people don't know how to use Discord. Um, the actual portfolio is available on my channel. It's not like I only go over it on these streams. You can see all the positions written out and all the weightings written out in my channel, in the portfolio channel. Um, all right, Lumen. So Lumen been consolidating a little bit post earnings. Not great daily candles. Obviously, we came up into 10 and then gave all that back now at 8:30. Weekly structure still looks great in my view. Right? You can see here just really no disturbance in the weekly structure at all. As long as it continues to defend this 818 spot, even if it comes down to the 780, 784, you can see some defense there. But weekly structure continues to look great in my view. And I like this general structure here overall, where you're coming up and defending these local highs. Yeah, I continue to really like the technical structure here and the story, right? And if you look at on the monthly, very, very similar setup that we like to attack here on the monthly with a flat 200-day overhead, 921 EMAs on the monthly pointing up, trying to produce that moving average pinch that I talk about a lot on a lot of my workshops. So wash that out and see if we can get that break on this one. And I'd like to see the monthly continue, sorry, the weekly chart continue to act as cleanly as it has. That'll be encouraging. If this continues to act as respectful of the moving averages it has, that'll be a good sign to see as well, on Lumen. Okay, CXDO, which the more I think about this stock, the more bullish I get. But this one had another monster earnings reaction for us last week. Really been acting just wonderfully since we got in here, and then just more and more green, and then a big earnings reaction move, and nice high and tight consolidation here. Again, moving averages catching up. You're somebody that's not in this one, or somebody's in this one, you're probably very happy, and you're chilling, sitting pretty. For somebody that's not in this one, not actionable. Sorry, I mean not until the moving averages catch up and give you a better spot to risk off of, but stock I really like. I mean, I think it's going to go a lot higher. I know in Spaces today I said it's going to double. I hate saying stuff like that, but I think it will. Um, and to me, this is really like the next band with a lot more torque, and in my view, a little bit of a better story. So, you zoom out on this thing and you start seeing the potential again, where you get these potential multi-year base breakouts. This one going back to 2009. You get over that, get clearance of that range. You can see 12s, 13s very quickly, and there's not a whole lot of resistance there in that 12 to 13 area. So if you blow through that, I mean, you could be talking about $20+ stock for Crescendo. I thought their last earnings report was excellent. They have the assets to make themselves enablers in this space. So remains a stock to continue to watch. All right, RNG. This is just a lotto that we had, which basically got cooked on earnings, but I think that this continues to look very, very handsome. And here you can see on the daily too, really good defense of the 9 EMA in spite of all that earnings volatility. You zoom out 5 years and you kind of see what I'm talking about with this massive 3+ year base and just a ton of potential range to the upside, right? So very, very interesting stock story here. Very, very, very interesting and dynamic technical setup in my view. And that's really what made me primarily interested, but also a compelling voice AI angle, a real voice AI angle, and another stock that has some overlap with bandwidth as well, which has been an absolute monster mover to the upside. So that's a telecom voice AI basket. All right, MITK. It's just the only name in our fraud identity basket. Man, the stock noise, a lot of you I know, but continues to act totally fine on the daily. Perfect consolidation on the daily, just consolidating away as people begin to think about this story. I liked the last earnings report. I thought they covered all the bases very well on AI identity fraud solution. They mentioned signing two of America's biggest banks to their AI fraud program, which is exactly, again, I look for thesis validating statements on these earnings calls. I'm not what we're looking for is the reaction good or bad, because I'm not gambling on earnings. I'm looking for thesis validating statements. And on Matek's call, we got a thesis validating statement when they said two of the biggest US banks have signed up for our AI fraud and verification and identity program. Why? Remember, the original thesis was they have the rails already, they have the distribution rails already through their mobile direct deposit, which all the banks use. They have monopoly in that industry. They have the access to the banks already. And so their AI fraud and identity and verification products can basically get cross-sold directly into those banks using those existing distribution rails. So that was a big part of the original thesis on Matek, and I think that they proved that. So yeah, stock does trade a bit annoying, but continues to consolidate and build beautifully on the daily chart, and the weekly has showed no signs of hiccup. So looks terrific. All right, LEU. Okay, daily continues to just be sort of stuck in the mud, right? But moving averages nice and tight here. Really on the weekly and monthly is where I can think you can start seeing brighter structure. So you look at this weekly chart, sort of curling off the lows, recapturing the 9 EMA here. I think trying to set up. I think if you zoom out a little bit more, it kind of looks more obvious here now. As you can see, this curling off the lows starting to happen. And then where you can really see it clearly is on the monthly time frame, where look at this. I mean, this is just a beautiful monthly chart. Um, like, frankly speaking, I think this is as pretty as a monthly chart gets, right? I mean, look at the range you have. So the range you have on this thing is insane, first of all, right? I mean, this is a multi-thousand-dollar stock before. Um, but when you zoom in, not that far. When you zoom in, you can see this. Look at this candle, quite literally being pinched in between the moving averages, the 200 month below and the 9 month EMA overhead. That's as textbook and clean as it gets, in my view, especially following these two candles, right? Look at this stoppage here, the close right on the 21 month. Then you get a little bit of a push off here the month after that gets rejected the 200. And now you have this new monthly candle forming here 11 days into May in between the two. So I think really explosive looking monthly chart there on LEU, in my view. Obviously, not as massive of a weighting for us anymore. I mean, at one point, this was over a 10% weighting. It's underperformed the rest of the portfolio pretty substantially, obviously, because it fell from 460 bucks down to 200 bucks. So if it gets cut in half, that's not going to really help with the weighting. But a name I continue to love just because of the uniqueness of their opportunity set. All right, IRDM. Now, obviously, IRDM's been so hot. One, two, three, four, five, six green months in a row. Stock has more than doubled for us. Calls are up, I don't know, 700%. Those calls that we were sitting on the 22 and a half. Now you see this big extension here to the upside. But when you look at these weekly time frame, you see what's going on here. You see this break of the 200-day, very, very soft back test of it. And price continuing to want to take off here on IRDM, I think just continues to look like an awesome setup. This is why I haven't gotten out yet. I've trimmed some of those contracts. They're up 600%, but I still hold the vast majority of them. I didn't need to sell many to pay for the trade on a 600% contract. But as you can see, we're pushing into this previous range now, and we're kind of eating through it. Now we're seeing 43 over 46. This thing's heading straight back to the 60s, I think. And then you have quite a bit of range from there. So IRDM continues to be what I really like. I think once they release their chip, their custom PNT chip, PNT ASIC chip, I think this thing will get totally re-rated as a chip company. Then it's no longer a satellite company. That's a chip company and a satellite company. And then I think you'll see a complete re-rating of this name when that happens. So that's IRDM. All right, we'll look at HII now. All right, so HII, ugly daily and ugly weekly chart. Talked about this before, the monthlies where our line in the sand remains on this one, 302. And it's defended that for now. So that's kind of where my line in the sand is on this one. If it falls below 302, there's a consideration that I'll cut it. But if it defends that spot, then I will stay long. This is a name that I continue to really like. Obviously, I think they're the most um, valuable shipbuilding exposure for the U.S. They have not been executing as well as I wanted them to on the last two reports. They're a bit behind schedule. They're not really able to put up the scale that they were expected to as quickly as they are. So that's a bit annoying. And I think that's part of the reason for the underperformance in the stock. I think another reason for the underperformance in the stock is the idea that the US is tapping Korea and Japan for shipbuilding. And so obviously that's not a great thing for HII. And so the stock has reacted negatively to that. But for now, it's defending where it needs to defend on that 21-month EMA. So I continue to be patient with it. The daily and weekly, though, do look like they're under pressure. And so you should not be surprised if you continue to see some relative weakness in this name. Now, AV, we picked up some lottos on this one. Remember, they are lottos. They should be sized like lottos. Um, but this one has come into the 50-month moving average, the 200-week moving average simultaneously. Now, when we have made bottom calls, when we have attempted to call bottom, we have done so on stocks that are doing this. We have done so on stocks that are at this spot. 50-month, 200-week moving average, confluence. That tends to be a really good spot for a stock to bottom, right? And so this might be the opportunity for this stock to do that. This might be the opportunity. And last time that we played AV at the start of the year, it was actually on an attempted bottom call like this. And those calls ran 1,000%, the ones that we opened at the very start of the year, right? So be mindful of that. This could be a name that bottoms here. And one of the guiding parts of this thesis, if you will, not one of them, but really the entire guiding part of this thesis is the idea that that Locust directed energy weapon system is the one that the U.S. is going to announce a deal for. I mean, they've done greenfield testing. AeroVironment has retweeted the project. I think it's pretty reasonable to assume, and I've had discussions with Mike about this, who's a defense expert on Twitter, pretty reasonable to assume that they will be a winner of that award. The question is, how big is that award? How quickly does it come? And how much does the market get excited about it? Um, but I felt like the risk reward was good down here, close to 200 week and the 50-month moving average. And so we took a stab, but again, very, very small size on those, just lotto calls. All right, last one, Kratos. So Kratos, dog poop stock lately, acting like shit and coming into really another last ditch area of support here at 59. And unfortunately, still really expensive. Not really a cheap stock still. So potentially more downside for Kratos, but it has to stick save itself here if you don't want to see that. This 21-month EMA, we've seen many stocks bottom there. It's a very, very important spot on a lot of charts because in a bull market, stocks that come up a lot, that 21-month EMA is going to have a lot of potential downside room below it. And so if you end up giving up that 21-month EMA in a bull market, generally speaking, it's a death sentence for stocks. You know, you can see here on Kratos, if it were to lose that 21-month EMA, it has downside all the way to $30, $32 at that 50-month. So it tends to be a cliff when you look at 21-month EMAs in bull markets, especially on stocks that have run a lot, they tend to be a big cliff. And so you never want to see that happen. Kratos now coming into that last ditch area of support. So if you're a risky boy and you want to bet on it bottoming here, this would be the area where it would kind of have to bottom, or else it would be going a lot lower. So uh, now a meaningless position in the portfolio, really, which is funny. Kratos used to be a 7 or 8% weighting. It's now 0.1%. It goes to show how much not only the portfolio has grown, but also goes to show how much Kratos has underperformed in the last 10 months or so, while the portfolio is, 15x in the last 12 months. So Kratos in the gutter so far and needs to kind of turn around and make a real mounted comeback in order to save itself here. All right, so that's all the portfolio positions. Like I said, except for the legacy positions, Amazon, Tesla, Robinhood. I don't generally go over those charts, own them for too long. Cost-based advantages are too deep. Um, but that's a quick snapshot of what we're looking at for stocks report this week. So now we will do about an hour on. We already looked at Lumen. We'll do about an hour on the lightning round. So what we're gonna do is you're gonna bring up a stock. You can pitch a thesis, and then you don't have to pitch the thesis. You can also just bring up a stock. I'm gonna quickly look at the chart, quickly look at the fundamental spread, and give you an idea of if I think it's interesting or not. And if it's a stock I've heard of before, then I'll give you more detail on that. And if it's not a stock I've heard of before, I'll leave it at that. But we'll do that lightning round now. So put those on. Oh, I didn't talk about ADIA from today. Aha, correct. Okay, we'll quickly touch on that first. So yeah, this one is such an interesting story. I mean, Mystic were talking about it this morning and last night, and we're just sort of shooting the shit back and forth about it. And we came to the conclusion that this is a really compelling name. And so this morning we were kind of bouncing off back and forth about hybrid bonding. You can read about that in my thesis. You can also read that about that in Mystic's notes. These guys have partnerships with SK Hynix, Micron, and SanDisk, right? So three of the best performing stocks of the year. These guys have direct partnerships with them. Not to mention that AMD also is it just lost a lawsuit to them and is forced to sign a multi-year license for their IP. So I think the semiconductor IP within this business is being dramatically undervalued, dramatically to the tune of billions of dollars. And so yeah, that made me want to just jump into this thing today. And so 2% all options is a pretty significant pure options waiting for me off rip. Um, and we're gonna see what happens. But yeah, this is a very, very, very interesting one. Again, go read Mystics DD, read my DD if you want to get a grasp on what our thinking is here. But we saw it sort of, or I saw it floating below these 9 and 21 EMAs. Then yesterday's candle popped it back below the 21. And so I said, okay, I'll take the risk here that is enough consolidation. You flip to the weekly, you can see very, very clean riding of the 9 week EMA on this name as well. So it has ran a lot already, obviously, this year, but I think there's a lot of good ahead for this name as the market sort of discovers how valuable the IP set is and how valuable the semiconductor IP set is. And again, remember, another part in my thesis here was around the idea that the fact that they are not just a buy and license company, they're not buying out pieces of IP and then licensing them. They are, if you're raising your hand in the Zoom, do not raise your hand in the Zoom. Put it in the questions channel. The market is undervaluing, I think, their semiconductor IP set. So that is something we should be mindful of. Okay, I'm gonna flip this questions channel. I'm gonna get something to drink. My cough is acting up now again. So let me get something to drink and then we'll do this. Put the tickers that you want me to look at in the questions channel. Do not ask questions because we're not doing questions today. Just put the tickers you're looking at in the questions channel, and then I will tackle them right now. All right. The legacy positions are just labeled on the portfolio update, like everything else. Yeah, if you're putting your tickers in the chat, I'm not going to see them. If you're putting them in the questions channel, I will. Okay, ADTN. Yes, I've looked at ADTN before. Very reasonable valuation. Um, they just reported earnings. They had an underwhelming earnings, but I think the chart still looks good. You can see here, trades at a 0.3 peg, 20 forward PE. They're growing earnings decently rapidly. The weekly still looks great. The daily, even with the earnings sell off, popped up today, recovered that 21 EMA. So it took a little bit of a break, but yes, I've looked at this name before. They do have a voice AI angle. They do have a telecom angle. So I think the stock is a viable way to play that if you're interested. The reason the stock sold off on earnings is because their optical product, their 1.6T product, um, is not going to be available for ramp until I believe they said late next year or maybe even 28. And so that's what created the lack of enthusiasm on the earnings report and sold the stock off. So yeah, I still like it. I think if you can be patient over a year or so, if you can be patient, I think the stock can still do very well. So yeah, I have looked at that. I wouldn't call it an optical networking play yet. I know that's how you described it, but I have looked at that name. Chart still looks fine. Valuation still looks good. Thematic relevance is there. Okay, I'm getting a bunch of questions, so I'm going to skip those for the fifth time. I'm not answering questions on this one because if I do questions, we're going to just make it a Q&A again. We're just doing stocks to look at. Okay, Arrow. Yes, I've looked at Arrow Electronics before. Another one, reasonable valuation, very reasonable actually. You scroll down the puck here, 9 forward P, zero point 0.3 PEG, zero point 0.3 price to sales, very reasonable. Structurally low margin business, like a lot of these other component suppliers, right? They're running a 10.8% gross margin, running a 3.4% operating margin. So there's not a whole lot of margin enthusiasm here, but as you can see here on the FinViz spread, um, very reasonable numbers across the board. PEG, price of sales, PE, EV over EBITDA, all quite reasonable. They had a nice earnings report recently. Stock didn't move much, but I think they blew it out from what I remember on the most recent earnings. Hold on, I've got to pull. Oh, that's not what I meant to do. Let me pull that back up. Hold on. Sorry. Doo-doo-doo. All right, yeah. Monster earnings report recently, as you can see here. The 9.5 billion beat, and they beat bottom line as well by a huge margin on EPS. So very strong earnings report, very cheap stock, um, breaking out of a pretty decent base too recently. This is a very long base, broke out of it, came back tested here, confirmed, and then took off. Solid name. Again, structurally low margin business, but solid name across the board. Very reasonable valuation, very strong chart here, and thematic relevance as well, and a strong quarter to boot to walk out of it. ATI, yes, I'm familiar with this name too. Pretty sure the chart looks good. Yeah, a little bit messy, but consolidation for the last 3 months. Looks like a viable entry here, 50-day 921 right there. Yeah, looks fine. And another one I think with a reasonable valuation. At least last time I looked at it, nah, not crazy, but not cheap, but not crazy. Again, a little bit of a runaway train. Not ideal. You probably would have wanted to enter here if you want to make a really ideal entry, but yeah, it is consolidating over the last several months in this range, and does have a lot of thematic relevance and overlap with like you mentioned with super alloys that are in a variety of industries from aerospace and defense to semiconductors to tech. Um, yeah, sex. Yeah, up and away. I mean, just riding with the packaging trend. Yeah, I mean that strong chart, momentum chart, but a strong chart, not like a based out entry or anything. I mean, if you guys ask me about charts that are going up and to the right, the answer is going to be thumbs up. It's not much to say other than that when you see a good chart going up and to the right. So, yeah, thumbs up. Valuation again doesn't scream from the rooftops or anything that's undervalued, but it ain't bad. It ain't a bad valuation. It's not overvalued. It's not egregiously expensive. But tough to get perspective on this one, obviously, as an ADR. Tough to get as much perspective as you can with the American names. But yeah, revenue trend looks good. Chart looks good. Good momentum. Imagine it's trading pretty similarly to Amcor. Yes, I do know about the Cerebras IPO. Did I go over BDC? Yes, I did. Okay, MRAM. Yeah, I mean this one, has exploded last couple of days. I'd looked at this one quite a bit down here. I wasn't interested in, but it's blown up anyway, just because, people will buy anything where there's a narrative. But as you can see, insane valuation, like just insane. I mean, I don't think they're growing anywhere near that amount to justify that. Yeah, I mean, they're not. You're going 16%. So yeah, it's very, very expensive, but obviously there's a perception here that this is unique technology, even though it's not. Um, I'd treat this like a meme stock. I'd treat it like a meme stock personally. That's what it is. That's how it's acting. Trade it if you want. I wouldn't call it some sort of big investment thesis, though. AEHR, yeah, look, another one. I mean, you guys love to bring up just popular retail names that everyone is on. Trades at 73 times sales, with very, very muted growth. Nothing superb coming out of the quarterly results recently either. Yes, there is a testing angle here that is unique. Yes, there's a testing technology here that is unique. Sure. I just can't underwrite it with that sort of risk and that sort of valuation. But obviously, most people, retail traders don't care about that kind of stuff. So whatever. Chart is nice, high and tight. Nothing wrong with this chart. Looks like it's going to go a lot higher from a technical standpoint. From a fundamental standpoint, I can't buy it. I mean, I have no clue how I would even begin to build conviction around holding something like this um, on an overnight basis for several months. We're trading at 75 times sales. Nokia, fantastic chart. I already know. I've looked at this one recently. Valuation is again maybe getting a little bit extended with this one, not nearly as much as something like AHR, but um, valuation is starting to get richer and richer. Um, as this thing climbs, obviously, but such a long base here that you have to just respect that. You have to respect the technical breakout, right? And just tell yourself, okay, this is a not really multi-decade, but 17-year base that is breaking out of as it broke 11 bucks. You have to allow that to play out before you even think about getting negative on something like this. Now that's trading in the 13s. You're well over the highs of this local range as well. And now you're potentially batting for 18 to 20 bucks in short order on this thing. So parabolic, obviously a bigger market cap, so the higher it goes, the more action will slow because institutions are much more willing to sellers on big moves like that with a big name like this than retail is. So yeah, that's Nokia. Um, okay, well, Microsoft, really? Okay, Microsoft. I mean, shitty daily chart, um, but it's Microsoft. So, like, is it going anywhere? No. Weekly, somewhat of a pinch happening here. Monthly, yeah. And I imagine it's trading at a pretty reasonable valuation, like most of the Mag 7 are currently trading at pretty reasonable valuations. Please don't ask about stocks like Microsoft and Apple, guys. Like, don't waste everyone's time. Telos, TLS. Okay, let's look at it. If I can move this thing. Oh my God, I hate Zoom sometimes. I mean, I don't know what happened today. Do you know what happened on this? No, it's pretty reasonably priced. Yeah, it looks reasonably priced in light of the growth, the recent growth. I don't know, revenue cadence doesn't really match that picture. Like 47 weak comps from last year or what? Some sort of turnaround going on in the business. I don't know. I don't know enough about what's going on here as to why it's so cheap, but it looks cheap optically. Daily, like I said, I would like to know what happened on today's candle. That weekly setup is nice though. I like this a lot. Gap up, pull back down, let the moving averages restack, reset. Yeah, man, that's very clean. Earnings today, like as in like tomorrow, or earnings happened? Oh no, they happened. Yeah, man. That's an interesting one, Razor. PSNL, yeah, I'm familiar. I don't really do healthcare and biotech guys, but I'm familiar with this one. I don't really know how I should be valuing it though. I mean, it trades at 2.6x cash. That's interesting. I think this is a logical play, if I remember correctly. I think logical's on this one. Um, yeah, this daily chart just says no entry to me until you get a reclaim. You'd like to see a reclaim here, pop above the 921, then maybe you can enter it. I wouldn't do it here with 921 EMA's overhead acting as resistance. You don't want to do that. See, rejection, rejection. You want to wait for price to flip those 921 EMAs into support always before your entry. You want to see the 921 EMAs flip to support, at least in the short term. OUST, yes, I know OUST. Don't explain that one to me. Nice here. Really nice consolidation around the 200 day. I like that. Right on the 50 week on the weekly as well. I like that as well. Yeah, I like what I see here a lot. And I like this name too. Yep. Very, very clean on OUSD. I think fundamentally they might still be a little bit expensive. Yeah, it's not cheap. It's not a cheap stock, but they're not running any sort of liquidity problems or debt problems. They're growing quite fast. Um, I didn't actually look at the last quarter in an extraordinary amount of detail, but I did see the negative reaction. I think it was down like 20 something percent, if I'm not wrong. Oh, a big EPS miss. I guess that's what it was. Revenues are going very rapidly, though. As you can see, this revenue cadence here skyrocketing. So even if it's trading at 10 times sales, quite explosive revenue growth. So yeah, I like this name. All right. VSH. Yeah, I've looked at VSH before as well. And a lot of these names you guys are talking about. Oh, long one. Yeah, so still trading around 1.5 times sales, decent revenue cadence over the last several quarters here. EPS trying to inflect off the lows. Monthly's taking off here, so is the weekly. Extended, man. You'd want to see this pull back. You don't want to buy it here. I mean, maybe the daily's telling you to do that though. Maybe if you can get to at least kiss the nine. I mean, the weekly just looks extended. I'd like to see this thing cool off if you're actually looking for a real entry, but um, they have enough interesting parts and components of their business where, maybe it could just be one of those semiconductor runners that just takes off. Really, really nice all-time chart though on this thing. Looks very good technically. Run post earnings, sure. Yeah, it looks like it's trying to bottom here. Spent a couple of months trying to bottom in this 11 area, now inflecting back above the moving averages. Looks like it wants to head back into that gap. Quite a bit of moving average resistance overhead on the weekly, though, so you got to be careful of that on the monthly as well. Just because something's a pumping up doesn't mean it doesn't have legs, dude. It could have plenty of legs just because pumping up. People think just because the stock goes up 500%, that's not pumping up. That's not how it works. Stocks can go up a lot for stupid reasons. Yeah, Twilio looks great, man. I mean, you guys love asking about stocks that are up like 50% in 2 weeks and then asking me how the chart looks. Like, some of you have been doing this for every workshop for the last 6 months, which means you've learned nothing. But anyway, yeah, Twilio looks great. it's going up and it's relatively strong versus the market and it's up a lot in recent history. I mean, you know, it's going to look good valuation wise as well. I think it remains relatively cheap, not as cheap as 5.9, but I mean, not it's not super expensive either considering the growth. So yeah, Twilio looks great. ANET, dump it for what I thought was a good print. Okay. No red flags or anything financially. Yeah, not a great candle today. Weekly still holding on. Pull back into the 90 MA on the monthly. Yeah, I just haven't looked into ANET enough to have an opinion on the second part of your question, is what I mean. But from a technical standpoint, it looks fine. Looks good, actually, from a technical standpoint. I wouldn't even just say fine, looks good. Coiling up here. I don't mind that at all. I mean, not on a daily chart, but on the other time frames, it looks good. Yeah, Hood still looks good. I just didn't like the earnings report, which is why I cut those calls. But yeah, it still looks good. Iron, okay, sure. Shitco Iron. Yeah, looks fantastic. I mean, holding a 90 MA on a high volume sell, weekly, consolidating for several months, probably going higher. Looks good on all time frames. Obviously, on the valuation, I think it's ridiculous, but that doesn't matter much. I don't think you're asking about that either, especially if you're an Iron fan. You're definitely not asking me about valuation. Um, EOSC. Oh, looks like it's poking back over the 9 month EMA here. It's attempted a bottom. Yeah, weekly's trying to build back up too. Yeah, looks like it's trying down here. Again, another one of those names that I think is a shitco, but has a huge cult following. Um, but yeah, yeah, could take a stab here. Looks like it's attempting a bottom. Do I think ADTN's supply chain is fucked from memory in Iran war? No, not necessarily. I mean, it's an impact, but no, that's not why the stock sold off. This ADTN sold off. I mentioned this at the start of the report. I mean, start of the workshop. ADTN sold off because their optical product was delayed. Why options only on Adea? Capital efficiency. Let's see. What? Yeah, up and away, right? Nice earnings reaction from this one recently. Messy trader, but continues to climb. Let's go look at this. Yeah, I mean, not something I would touch, but yes, it's, I mean, going up a lot. It's strong momentum. And all things being equal in the market, it probably goes higher. But I mean, I'm not paying that. They're not even growing enough really to justify that kind of multiple, in my opinion. They're going at a 17% clip to trade at 30 times sales and like a 70 forward. I don't know. Whatever. I mean, I guess if you love their technology and have a deep understanding of it, it's not fine. I already went over Nokia. Okay, well, you just throwing tickers at me now. I mean, one ticker each would be ideal, but okay, I'll look at them for you. Yeah, again, extended. Do you guys just see stocks go up like 7 times, 7 sessions in a row, and then you want to ask about them? It seems like a running trend here. Yeah, I mean, wait for it to cool off, man. I mean, where is the interest coming in a stock like this? Like let it cool off, let it touch a moving average. Um, NVT. Okay, this is a little bit better, but I mean, again, let price get tighter, let price consolidate, let moving averages catch up and base out. If you want really good entries that are going to last you for months or years that you can hold through multiple markets, you need to have the discipline to do that and not chase stocks that are just up because they're up and because you have FOMO. I wouldn't call this one example of that, but the last one we looked at certainly was. This one does a nice job, as you can see, of coming back into the moving averages, planting seeds, and then curling back up. It does that a lot as you scroll through this chart. And so here again, just let that happen. You don't have to chase it. Already went over MRAM. Interest rate to take on. Okay, App is a big company. I just haven't looked at App enough to give you an opinion on that. Peng, yeah, Peng is fantastic and looks great. Um, obviously it's just a runaway train now. I think it's one of those where you're in it. If not, you wait again until it kisses the moving averages. But I remember looking at this 2 months ago when I was interested in the stock, and all these numbers were very, very low. I still think the price to sales multiple is maybe where you hang your hat on in terms of the stock being cheap, but it's not cheap anymore, especially considering the fact, again, that they're not really posting explosive um, growth here, right? I mean, they had a nice quarter last time. I believe there was some one-time write-off benefits, but they had a nice quarter last time. Revenue cadence, though, is still pretty muted, right? You look at this 10-year revenue chart, it's not like it's going up and to the right. So we'll have to see if this growth that they posted last quarter can normalize and be something that we continue to see. But yeah, it remains a name that Mystic really likes, and valuation's reasonable enough for it to keep going up. So I think those are two reasons to continue to be confident in it if you're long on that name. Okay, QS. I already went over iron, but look at QS. Yeah, creating a moving average pinch here with a 100-day. Looks good. Looks like it wants to see tens again. Again, not a name you can wrap your brain around financially because basically pre-revenue, not, I don't think literally pre-revenue, there was a little bit of revenue, but basically is trading at what, 5.5 times cash. So maybe there's a saving grace there. But yeah, not really a stock you can get much of a fundamental grasp on. It's just one of those things you sort of have to believe in. It's still very much a prototype company, even though they may not always present it that way. Weekly and monthly charts on this are showing real signs of bottoming. I think the weekly actually looks a little bit prettier, where you can see this 200-week moving average sort of surging as a base for price to bleed into. I think that's nice to see. Iron, already looked at that. ENVX and NB. ENVX. That looks good here. Consolidating above the 100, trying to recapture this area, letting the other moving averages catch up, and now looks like it wants to make a push to the 200. I've not looked at this name in a while. Uh, yeah, I mean, crazy expensive. 50 times sales? Yeah, no, not for me. CRDO is a great play. I don't think it's trading at a crazy valuation as of today. 12, well, ain't cheap. Fuck. 36 times sales. Now, forward P is only 56, though, with that kind of growth. That's not terrible. So I wouldn't say it's extremely overvalued or anything, but it's not cheap, certainly. I don't think stocks like that growing that fast should be cheap, though. So that shouldn't disturb you or surprise you. They're FINV is saying forward P 40. So yeah, I mean, does it have room to push higher? Absolutely. It's formed this big V. That's too far out. Jesus. All right. Yeah, it was great. Very strong too. APH, TKR. All right, whoever hasn't put a ticker in, no more tickers. If you put a ticker in the questions channel already, there's a bunch I have to get to, so no more tickers. Broken daily and weekly. You need to wait for some stabilization on the daily and weekly. You got to wait for price to find a spot to stop here. You can't just buy it at random places. Let price find a spot to stop. Wait for it to recapture a moving average or two. And then if you want to pull the trigger, you can pull the trigger. Decent valuation, pretty reasonable actually, considering the growth. Very reasonable. Nice last quarter as well. So fundamentally, I really like the picture here. Um, Chart wise, it needs to wait for a little bit more. Needs to do a little bit more work. Okay, TKR. Yeah, pretty reasonable valuation. What is this multi-year base it's breaking out of? Hell, yeah, looks clean here. Well, the moving averages catch up, even getting a little bit closer. Would be nice to snag. They did a spin-off of a business I really liked. I forgot what it was. What was that business I'm thinking about? I forgot. Yeah, real nice, man. This base here, kind of soft back tested it, up and away. Symbiotic. Yeah, I think last time I looked at this daily chart, it looked nice. No, it doesn't look so great anymore. Yeah, daily and weekly look rough here. You need to wait for them to stabilize. Same answers I give the last guy. Fundamentally, yeah, fundamentally it's not bad. I mean, you can call it a speculative name. You don't really have to look at the P. Price to sales is not, oh, it's not great either, honestly. Yeah, it's not cheap. But regardless, from an actionability standpoint, daily and weekly, get away from some stoppage in the price action here before you jump on it. LRCX, yeah, up and to the right. Man, it's kind of terrifying to me how many of you ask questions about stocks like that. They're just up and to the right and ask me if it looks good. Of course, it looks good. Running great margins too. I mean, yeah, it's Lam Research. I mean, looks good. Core semiconductor name is going to go up with the rest of the industry. Not really much of a point. You guys asking me about 100, $250 billion stocks. Just not much point in that. Or whatever Lam Research is. I mean, what, 370 billion? Um, White fiber, yes. Mystic likes this name. Like I said, not actionable here. 27 bucks. Closest moving average is at 20 bucks. The second you see that, it's something you're looking to buy, you just say, okay, either I miss it or it gives me an opportunity. You can't go around just buying stuff that's, 30, 40, 50% removed from its 90 MA. You'll get killed. But nice structure building here on the monthly after some weeks of sloppy action. SOLS, yeah, this is another what is this? Another kiddo stock. Consolidating up here, high and tight, really. I mean, push up here. This is your gap up. Consolidation ever since. I mean, you knocked this candle out, I guess, of the equation, but yeah, it looks like it's consolidating nicely. I don't think I've ever looked at the fundamentals for this one. Looks like an aerial view. Not bad. 0.69 pack, 26 forward. Um, yeah, okay. I mean, looks all right. I do like this. I like this several months of consolidation. That tells me something good could happen. Already went over Nokia. DDDD. Yeah, it looks great here. Consolidating above the 200-day, 921 pointing up. Looks good. Looks good, man. If you like your 3D printing, it looks good. It's probably not a sector I'm going to revisit either. 3D printing and 3D printing and I forgot the other one. But anyway, 3D printing here. Just trying to get over that 21-month EMA, as you can see. Another one that looks like it's attempting to bottom. Do I think the risk reward's a little bit better if you wait a little bit? Yeah. But a breakout over this 100 week could be explosive. So I don't want to bust your balls and say like wait and then it rips to $5. But it is setting up for a potential move here on DDD. ARRY, Adur. Yeah, I know both of these. ARRY. Taking a shot here, you know? Yeah, nice. I like this. Pushing above the 200-day, trying to get back into the gap. Looks nice, man. I believe, again, like a lot of these solar names now, this one's trading at a pretty reasonable valuation too, I would imagine. Yeah, it is. Pretty reasonable valuation here too. Like a lot of the solar names which have been neglected during the Trump administration. Okay. RY, I already looked at Penguin, didn't I? Yeah. Grab TTMI. All right, I mean, we're not going to get to all these stocks because there's way too many tags. So, yeah. Some of you are still typing. No more typing because if you haven't put your stock in there, I'm not going to get to it. I'm just scrolling through and seeing if there's anything actually interesting or if you guys are just parroting the same stuff and it turns out you guys are just parroting the same stuff. I don't know what you mean by eat lots of garlic, but I'm still sick, which is why I'm blowing my nose and coughing still. Oh, you just meant as like um, a cure. No, I mean I'll be fine, dude. I feel better than I did a few days ago. Give me a day or two more, I'll be fine. Um, okay, let's just go back through these. I'll go through these till 10, so for another 20 minutes, and however many I get to, I get to. However many I don't, I don't. Okay, TTMI. Yeah, I just wish like one perspective you guys can take from me for being sarcastic on these is like you guys should make a habit of looking for stocks that are chilling, like are based out. Not these stocks that are like running super hard and then you get FOMO. 99% of the questions you guys have asked me about are just stocks that are just ripping. You know, I mean, you can trade them on momentum, but you're not going to get a great multi-year or multi-month entry off of something like that. That's not how you make a ton of money. You make a ton of money by finding based out stocks that are going to break out, not the ones that are on these massive runs. But I like TTMI. Look, it's a good company, a lot of overlap, a lot of thematic overlap into several themes. Still not too expensive in light of the growth. We're trading a forward P of 33. So. But it's parabolic, right? Like this is a parabolic move, right? It's 8x already from the base. You know, if you are super gung ho about owning it, own it. But, just in April of 25, it was $20 and now it's $162, right? Like this has made a Nebius type of move. Would you buy Nebius at 160 versus 20? I mean, you have to understand your risk reward dynamic there. But yeah, the valuation is still all right. NUTX looks nice. I don't know anything about this company, Nutex Health. Pretty reasonable valuation. I don't know if they're growing or not. Yeah, they're growing nicely too. Reasonable valuation. This looks like a solid one, man. Again, I don't know what they do, but they're growing hella fast on a year-over-year basis. Pretty reasonable valuation. Not a crazy amount of debt. That's probably sustainable. I mean, they're still posting 96 million of income, so that's I don't really see that debt as an issue. Decent gross margins here at 47%. Pretty good operating margins too at 32. So yeah, they're operating nicely. I imagine they operate healthcare facilities or something like that based on the description I'm seeing here. Um, Green Net, I went over that. NVTS, I mean, again, stock's up 24% today, and then you guys want to ask about it, but whatever. Yeah, I mean, this is a nice consolidation that happened here, pushed through the highs of that range and is now running. I think this name is pretty expensive from what I remember. Yes, very expensive. Trades at 130 times sales. Woo-hoo. But gorgeous chart structure, right? You can't deny that. So, sometimes it doesn't take too much fundamental juice to understand what's happening because this is really, really pretty structure. So, nonetheless, nice structure, despite the fact that it is a very expensive stock. Very expensive. Very expensive. CLMT. Yeah, I mean, it looks cool. These materials and specialty chemical stocks all have pretty strong charts recently, so I'm not surprised to see this one have that too. Decent valuation, 0.67 times sales, 27 forward PE. Are they growing though? Uh, Not really. Not really. I mean, they do have a lot of thematic overlap with chemicals, but chemicals, materials, is always a tough way to play a theme because you need a lot of premium pricing, right? You need a lot of pricing power to drive a re-rating in a chemicals and materials stock based on just thematic relevance. So you have to be careful about that. Nokia, we went over that already. CRDO, we went over that already. EMVX, we went over that already. Kyle, AMPG. Yeah, I've looked at AMPG several times. It's an interesting one. Still trading a reasonable valuation. Lumpy revenue mix, but growing fast. Wow, what a move today on that thing. Holy. 21% of the upside, pushing into that 100-day. Um, yeah, it looks like it wants to run. Yeah, this doesn't look too expensive. Crazy amount of debt either, really no debt. 6 times cash, 2.7 times sales, forward P of 6. Yeah. Earnings released pre-announcement. Oh, so they pre-announced, huh? Earnings in 2 days. I guess they pre-announced good numbers then that smashed these ones. I didn't know that they pre-announced. Yeah, that is it is a good play. NVEC. Okay. Okay, another one that's capping up today again. If you like these kind of names, get up in these areas when they're kissing the moving averages or basing, not after they make a big run. Stock is pretty expensive, but if they continue to execute, I mean, that's a hell of a basing structure. It's built over a very long time. Ugh. Yeah, I've looked at Uma before. Yeah, it looks pretty reasonable. Yeah, again, up and to the right, riding the 9 EMA. Not really actionable until you see this price settle, consolidate. Financials look good though. Valuation looks pretty reasonable in light of the rest of the business. A lot of these telecom voice AI charts look like this, just steady climbing in revenue. Um, the critical infrastructure angles that you bring up there is interesting. RRX, yeah, that's another name I like. I like a lot of these names. RRX, I believe they traded down recently because ALNT got killed on earnings. So there's a little bit of a depressed sentiment there, but stock has been attempting to build this flagging structure ever since February. It gapped up, the 160s and the 200s, pulled back down, and is now returning to those highs again. Last report, I believe, was pretty good for them. Okay, relatively in line, so not really a smash out report. But again, the difficulty is the rest of the business is still not growing because even though they are seeing traction in the segments that we talked about, in the robotic segments, they are not growing overall yet. Sivers Semiconductor, yes, I'm aware of that. SSYS. Yeah, another 3D printing play. It looks like a lot of you are starting to look at those. Those charts are setting up in a way for temp to bottom. SSYS kind of doing the same thing. They wanted to force this pull back below the moving averages on this sell candle here. And the last two sessions, we're recapturing the 50 with a 9 and 21 overhead. So SSYS looks solid as well. Weekly gives you a little bit of a danger here, though. So on this weekly, you would like to see a recapture of at least the 9-week EMA before I would attempt to take an actionable look at that name. I imagine you meant 4 years, or did you mean 3 years? You meant 3 years. Yeah, it looks clean. $12 million stock, though. Won't spend much time on that one. Qualcomm, again, you guys have a lot of FOMO, don't you? 90% of these questions are about FOMO stocks, where you're looking at a name that's capped up like crazy and you just want to buy it just because it's going up. It's new behavior. But anyway, yes, Qualcomm is ripping and continues to look strong and probably goes higher in a bull market. That's what I'll say about that. Don't really need my input on Qualcomm, massive stocks like this. CLFD, yeah, I mean, again, same exact thing. Um, Up big recently, stocks going up and to the right. More to say than that. It is trying to break out of this multi-year base here, so that from that perspective, if you zoom out a little bit, it looks much more interesting. On a zoomed out perspective here on the weekly, pushing through the weekly here, you'd want to see this thing break out of this large multi-year base. Then you can start seeing the 70s, potentially even a double on this name on CLFD. So that's pretty dynamic setup there on the weekly chart. Again, not a cheap stock though, considering the lack of growth and considering the fact that the forward PE ratio is sitting at 44 and a half, trailing PE sitting at 260. It's certainly not cheap. So be mindful of that. And then let's see here, RSI. All right. Yeah, Rush Street. I mean, Rush Street's been a monster. Again, an extended stock, but on the daily, it is high and tight here, consolidating. So it looks nice for a stab here. If you are trying to get involved in the momentum, it is looking like a decent name here. where it is sitting, especially on the daily structure, the weekly structure, not so much, a little bit extended on that weekly. CRNC, yeah, me and Mystic were talking about this one a couple of weeks ago. Had a negative earnings reaction, but stayed tucked here near the 200-day moving average. So this one continues to look interesting. You put on the fundamental sheet here, and you can see still pretty reasonable valuation, right? Not a valuation that's insanely expensive or anything, especially considering the fact they are posting revenue growth still. Another one that's clumpy from a revenue cadence standpoint. You're not going to be able to figure out a ton about it based on that. They did have a big EPS miss that led to the stock selling off. But the fact that you've seen such gravity, or I should say lack of gravity around the price, in spite of that bad report, does make this continue to look interesting, and it consolidates here around the 200-day moving average. So nice look on CRNC. To ESP, yeah, it's another name I'm super familiar with. Solid electronics name. High and tight here, consolidating. This looks explosive with that daily setup there. Very reasonable valuation as well, in light of the growth. So, yep. Not a name that doesn't do earnings calls, I believe. Yeah, they don't do earnings calls, just like PLPC, so that's a bit annoying, but it is consolidating here. Very, very strong technical structure. Moving averages have caught up to price. And so now this thing is looking to make a directional move. Earnings are coming up for this name this week. All right, just way too many tags. So this will be the last one here. OII. A lot of you are in this. Yeah, I mean, beautiful consolidation on this thing for several weeks. Nice consolidation on monthly and daily. Yeah, this looks fantastic. OII looks great. I think the valuation is also quite reasonable on OII. Yep. And look, it's popping over this it's on the monthly, the 200 month. I believe you can see that probably clearly here on the monthly. And you see that 200 month moving average. So you have this sort of daily setup that we look for happening on the monthly here, which is really nice to see. And then plenty of range to the upside on this thing as well. So OII looks solid. All right, guys. Um, there's like 100 more of you that tagged a ticker, so we just can't get through them all. It would be here all night. So yeah, we will do more checking on these positions next time we do this. But yeah, that's next time I'm gonna put a little bit more instruction into the fact that you guys should come more prepared for those questions. Those are all pretty lame stocks to bring up. You're just bringing up stocks to me that are gapping up. I'm not going to give you any remarkable insights on a name like that. Um, so yeah, I'm going to put some more instruction on that next time. You guys are just bringing up stocks to me that are up 25% on the day. You have to be more disciplined than that, and also be a little bit more creative than that. Try to like do your own research, not just read stuff on Twitter and then bring up those stocks. I thought like maybe one of those were interesting out of the 50 that we just went through. So try to watch my other workshops maybe and figure out a little bit about how you should be looking at stocks. Um, don't get interested in something just because it's going up. Don't try to buy stuff that's up 26% on a day, things like that, basic logic. Um, so yeah, we're not going to do a lightning round on the next one until I figure out how we can do that better because that was kind of a waste of time. And next time we'll just go through my positions and then maybe do some genuine Q&A on um, on other topics. But yeah, try to be more thoughtful about the stocks you guys are looking at in general. Okay, I'll get this recording posted pretty soon whenever it's uploaded, and then we will see you guys tomorrow. I'll probably be upsizing some positions this week, and so I'll let you know if that happens tomorrow or Tuesday or Wednesday or whatever. I'll probably wait for at least one or two of our earnings to go that are coming in this week, and then I'll let you guys know what we're thinking. So yeah, I'm gonna go walk Leo and then go to sleep, and I'll see you guys in the morning in my channel. Take it easy, everybody.